Yes, so very good morning to all of you. Right, so how are all of you? Very busy? Yes, now you'll be super busy studying audit all these days now. Okay, right, so very warm welcome to the Intermediate Auditing and Assurance batch, right? An absolutely new subject for all of you. No introduction to that subject at the foundation level. Right, so now you have a booster that yes, I can do it to the CA course because foundation already done. You said some circling and something, right? Some A, B, C, D, some multiple choice questions to be selected and doing the classes. So now you have some roadmap regarding how to prepare for the intermediate subject and so. Right, so without having any other discussion, let's directly get into the discussion for the subject. I am very particular about discipline in the class, right? I ensure silence, right? The rule is that whenever I am speaking, you should not be speaking, right? And then I would be speaking in the entire class because it's a theory subject. So there is no problem solving or no calculations or so to be done, right? So it's always going to be only who would be speaking. And then, yes, if you have any questions, if you have any doubts, you can just raise your hand. And sometimes I'm in the middle of the concept or so, so that time I may not take up your question. And generally, the answer to your question comes in the remaining part of the discussion. So you can also think of it this way, that let the entire discussion get over, and then after that, still if I have a question, then obviously that should be questioned and I would like to give the answer for the same. Right, so yes, all of us, do we have an experience of crossing a road at a busy signal or something like that? Right, do you have an experience of crossing a road? Right, so how is it like? You just say that I need to cross the road. So whosoever, whatever vehicle coming, whatever happening, do you just cross the road, or is it like you take some precaution, you take some care while crossing the road? Like what type of precaution, what type of care you take? Right? What do you see? You see left, right, and on both sides, before you cross the road. Okay, but now you see that one cycle is coming very slowly from the other side. So then you say, let that cycle come till, I can cross the road. Not a big deal. Just a cycle is coming. Even a bike, so you might say, okay, I can see that the bike is coming, but you take a judgment that, by the time the bike is there and I'm over here, so by the time I cross the road, I don't think the bike will reach. Or sometimes you think that, oh, the bike is coming too fast. So let me just wait, let the bike go, and then after that I will cross the road. Right? So cycle, you take the risk of crossing the road. Bike, you are like a bit careful about it. See, there is a big truck coming from the other side. Right? So then you say, however fast, however slow, let the truck go first. And then after that, I will cross the road, or I'll cancel also my plan to cross the road and just go behind over there. And say another, more worst over there. You see that an ambulance is coming at full speed. And the siren is also making noise over there. So obviously, in that case, again, 2-3 other people, you will tell them also, move aside, let the particular ambulance go over there or something like that. Right? So simple, even when we have to cross a road, we do an audit and only then we cross the road. Did you not do an audit? Tell me honestly, did you not do an audit? Yeah, so exactly this is what we had do in an audit. Right, we check how much is the risk, how the company is preparing financial statements. Is there any small risk, like a bicycle risk? Now, don't write in the exam. If there is a bicycle risk, it's okay. We'll study the technical terms related to this. But then, yes, we have to keep our eyes open. That is first thing. So, in audit, we study a very important term over there called as professional skepticism. That means to have a questioning mind, being alert in the audit. So just as when I'm crossing the road, I'm being so alert over there. So similarly, when we are doing an audit of financial statements, we have to be alert. Right, so I said a big term over there called as audit of financial statements. What did I just say? I mentioned about audit, and then I mentioned about of is the connecting bridge between the two. And then I said audit of financial statements. See, as such, there are many types of audit. So I am just talking about one variety of audit over there, right, which is the statutory audit. What do you mean by statutory? Law. So audit which is required under law. Right, so we are talking about that audit which is required under law. In case if I'm talking about a company, then I'm talking about an audit which is required under the Companies Act 2013. Right, so statutory audit. Then there are other audits, like there is an internal audit where an internal auditor, he will check the internal controls in an organization. Right, internal controls in an organization, like what is an example of an internal control? If we just try to familiarize ourselves with these terms and all over there, like I said, internal auditor, he will check the internal controls, right? Internal audit of the internal controls in an organization. Right, so if you go to a particular mall for some purchasing and then you purchase whatever is required to be purchased, then you go to the billing counter, you do the billing, you make the payment over there. But still at the exit of that particular store, there will be a security person over there who will check that, please show me the bill, of whatever you have purchased. And then that bill, he will check, oh, in the bill, there are 4 items reflected over there. He will check in your bag also whether 4 items are over there. Right, so what's that? That's an example of an internal control, a control which is there internally within an organization. Right, a control which is there within an organization. Right, so when the internal controls in an organization are being checked, say that is called as internal audit. Right, then there are a lot of types of companies, no? Like we have a manufacturing entity, we have a software company, we have a banking company, telecom industry, right? Retail, FMCG, the fast moving consumer goods and so. So if I talk about a manufacturing company, say which is manufacturing cars or which is manufacturing, say, trucks, like say, a company like manufacturing cars could be like, say, Tata Motors, right? A big organization. Now, Tata Motors would also be having a huge amount of inventory. They would be having a lot of raw material, a lot of work in progress, lot of finished goods also would be there in Tata Motors. They would be having lot of spares and, spare parts and loose tools and all of that, right? So that is being audited. So, if they are checking the inventory means they are checking the cost records of the company, what you study in your costing syllabus or which you might study later on, wherein we talk about material, labor and overheads, because what is required for manufacturing or production is required as material, then there is labor required, and there are different types of overheads which are required. So if a chartered accountant or a cost accountant over here, right, if you're checking the cost records of the company, then that is called as the cost audit. Right, then that is called as the cost audit. Right, say the income of a person is exceeding 1 crore. The person who is in profession, if his receipts from the profession are exceeding 50, then that person is also required to get a tax audit done. So there is no end to the world or the variety of the audits being done. Like if you're doing an audit of the management of an organization, you're saying, oh, this organization, decision making of the management is going somewhere wrong. Why the management is so inefficient? Why there is no efficiency in the decision making of the management? So then we have an audit called management audit. So anything can be done, checked in an audit. No, what we are checking, accordingly we put the name of the audit. Anything can be checked, and anything that we check, then that is what technically we call it as an audit. So anyways, right now the important term which we have picked up over here is the audit of the financial statements. Okay, so what do you mean by financial statements? Let us just deliberate on these 3 words now. Audit of financial statements, FS, right? That is the financial statements. What do you mean by financial statements? Anybody, any guess? Balance sheet, okay. Statement of profit and loss, cash flow statement, statement of changes in equity if applicable to the company, and notes. But what is the technical term of notes? Summary of significant accounting policies and other explanatory information. Technically, that's the correct name of notes to account. What is it? Summary of significant accounting policies. What is given in the notes to account of a company is the significant accounting policies and other explanatory information. What type of other explanatory information is given? Purchase of capital assets, that is any capital commitments of the company which they are going to purchase in the future, any disclosures regarding the leases, right? Any managerial remuneration, how the computation of managerial remuneration is done, contingent liability, all that is disclosed in the notes to account, right? So this is what we mean by the financial statements of a company. This is what comprise of the financial statements of a company. On what basis these financial statements are prepared? Like company is preparing a balance sheet, company is preparing a profit and loss account, a cash flow statement on the basis of, right, journal entry directly, right? So financial statements, when you prepare the final accounts of the company, do you have the schedules for the same? Right, you have the property, plant, equipment schedule, you have the inventory schedule of the company, right? So you have the various schedules, like interest also, interest income. There is a schedule. A schedule is what? It gives the details of that particular item of the financial statement. Like in the balance sheet, if I see property, plant, equipment, intangible asset. So now property, plant, equipment is a big heading over there. Now within property, plant, equipment, we have land and building, we have leasehold land, we have plant and machinery, computer equipment, furniture and fixture. So all that, then there is opening gross block, add any additions during the year, then accumulated depreciation for the year, closing gross block. Because if you look at the balance sheet of the company, it just simply shows what? Non-current assets 1,000 crore. But what is the breakup of those non-current assets or of the property, plant, equipment of 1,000 crore? That is given in the schedules. Okay, then schedules, the information comes on the basis of the trial balance, right? So schedule, the information comes on the basis of the trial balance. In trial balance, right, where does the information come from? It comes from the various ledgers. In the ledger, where does it come from? It comes from the books of the prime entry, the journal entry. And where does it come from, the books of the prime entry? Right, the source document, the supporting documents on which the accounting entries are passed in the books of account, the supporting document. Can anybody think of any example of any supporting document for an accounting entry? Voucher, like how would you more, like voucher is a very broad term. How would you define, okay, this is a voucher for this entry? Like for any purchases of the company being recorded, there will be a purchase invoice which would be received from the supplier, right? Then any sales done by the company. Now, see, if a company make purchases, like if I purchase a laptop, okay, say I go to Chroma or I go to Reliance Digital and I purchase a laptop or I purchase some stationery from any stationery store, okay, will I get the original receipt? When I go to any purchase, will I get the original receipt? I go to a shop and I purchase something. Will I have the original receipt with me? Yes. What are you saying? I go to Chroma. Will they not give me the bill of the purchase which I make from there? If I go to a stationery store, will they not give me the original bill over there? Okay. But now, so when I make a purchases, I get the original invoice. This is practical understanding. And when I make a purchases, I get the purchase invoice. But when I make a sales, do I have the original invoice with me? No, original invoice, I will give it to the customer. So what will be there with the organization is the copies of the receipts issued. The copies of the receipts issued. Do you understand what I just said? Okay, for purchases of a company, will the company be having the original purchase invoice for the same? Yes, the company will have the original purchase invoice. Like if I purchase a laptop, will I have the original invoice of that laptop? Yes. But if I make a sales, will I have the original sales receipt? No, the original sales receipt will be given to the customer. What will be there with me is the copies of the receipts issued or the copies of the sales invoice, right? So that's the supporting document on the basis of which the transactions are recorded in the books of account. Okay, and now what is recorded in the books of account of the company in the the journal entries and the supporting document? For that you need to look into what is the nature of business of the company. Right, you need to look into the nature of business of the organization. What type of activities, what type of transactions is the company entering into? Like, you know, if it's a company, like again, if I talk about the Tata Group, like right from salt to software to sari to airlines, they are into all lines of business. Right, you see that organization, it is into all lines of business. But if I see a company like Boat, right, both you only have all the headphones and the speakers and only that particular one line of business in which the organization is into. Or if I talk about an organization like say Instagram or Facebook, then they are only into RDBMS, right, the relational database management. They have huge amount of data and there is lot of app development and lot of advertisement income which is earned by those organizations, right? So I need to look into the nature of business of the organization. I need to understand the organization whose financial statements are being prepared. Now, who will prepare the financial statements of a company? Right? Who will prepare? Accountant. Okay, accountant. So if I'm say doing the audit of Geo Limited, let's just take an example of a company. Right? So now Geo Limited. So now who from company side, manages company side will prepare the financial statements? The management, the accountant, right? The management is the accountant, right? Whosoever working in the accounts department of the company, they will prepare the financial statements. Are you understanding that? Okay. Now, so already management is preparing financial statements, but now management, they are running the organization. They're managing the organization. They are taking the decisions regarding how to run the organization and so. But are they like the real owners of the organization? Right? Are they like the real owners of the organization? No. Who are the real owners of the organization? The shareholders, the stakeholders. They are the real owners of the organization. So they are the owners of the organization, but who is managing the organization? The management is the shareholder, the management, the board of directors of a company, right? So now there is a gap between the owners of the company and the runners of the company who is actually running the organization. Okay, now management has prepared financial statements and they give to the shareholders. Okay, see, shareholders, this is the profit our company has made. These are the assets our company has. This is the tax we have paid. Now, can the shareholders rely on these financial statements prepared by the management? Would the shareholders rely on the financial statements which are prepared by the management? They cannot rely, no? Why? Because the management may have manipulated. Right? The management may have manipulated the financial statements of the company, may have manipulated. That is why what the shareholders do, they appoint a CA, they appoint an auditor. Right? They appoint an auditor and they say, rather than all we shareholders going to the company and checking the financial statements of the company, what auditor you do? You go on our behalf to the company. You check the financial statements which have been prepared by the management. You issue us an audit report. Right? You issue us an audit report. You express an opinion on the financial statements of the company. And on that basis, now will the shareholders be in a position to rely on the financial statements of a company? In that case, now will the shareholders be in a position to rely on financial statements of a company? So look like, these are the financial statements of a company. What did we say? Financial statements, balance sheet, profit and loss, cash flow statement, statement of changes in equity, and then the notes to account or the summary of the significant accounting policies. Okay, now say with these financial statements, who has prepared them? Management. Who has prepared them? Management. Now say the company wants a loan. Sometimes a company may require a loan. So that is why they go approach a bank. That bank, we want a loan. So bank says, okay, we can think of giving you a loan, but you need to, it tells the management that you need to submit your financial statements. Okay, now the company or the management knows that if we go to any bank asking the bank that please give us a loan, the bank is going to ask for the financial statements. And the management knows that currently the financial statements of the company, profit and loss account of the company is showing loss of 200 crore. Okay, and they also know if I go to any bank with this amount of loss of 200 crore in the profit and loss account of the company, no bank is going to give me a loan. Right? No bank is going to give me a loan. That is why what they do, they inflate the sales of the company, say by 1500 crore or so. Right? So say actual sales of the company are 1000 crore. How much they show in the books of in the profit and loss account? 1500 crore. Say actual purchases of the company are say some 2000 crore or so. Or they are like say 1200 crore or so. What they do, they show that the purchases of the company are only 800 crore, right? That the purchases of the company are only 800 crore, right? So what is the reality? The sales of the company are only 1000 crore. The purchases of the company are 1200 crore. That is why the company ideally is showing a loss of 200 crore. But what management do? They manipulate. They show sales of the company, over recording of the sales as 1500 crore, under recording of the purchases 800 crore, and they say profit of the company, how much? 700 crore. Profit of the company 700 crore. And now they know If I go to any bank asking them for a loan, any bank will happily give a loan to such a company which is having a profit of say 700 crore or so, right? So now they, prepare these books, financial statements of the company showing profit of 700 crore, and they say that bank, please give us a loan. Okay, bank says, let me see your financial statements. Bank sees financial statements, and they say profit of 700 crore, very good, very impressive. They say, who prepared these financial statements? Management says, we prepared. Okay, then bank asks, did anybody check them? Did anybody check them also? Well, no. Only we prepared and we directly got it to you. They say, get out. Right? You first need to appoint a chartered accountant. You need to get your financial statements audited. We require an audit report on these financial statements. Only then we will believe that really you have a profit of 700 crore. Right? That really you have a profit of 700 crore. Right? So it is not only in the context of shareholders. There are a lot of other beneficiaries also of the audited financial statements. Right? So if these are only the financial statements of the company, they are beneficial, they are useful. But when would they be more beneficial? If before all of this, there is an independent auditor's report. That auditor has expressed his opinion on the financial statements of the company. Right? So if I say financial statements, okay, they are beneficial, they are useful. That is why an organization prepares them. But when I say audited financial statements, oh, now they are more sufficient, now they are more reliable, now they are more trustworthy. Do you understand that? Right. So that is what we mean by the term audit of financial statements, right? Audit of financial statements, right? So audit means what? Auditor has to do an independent examination, right? So what does the definition of audit say? That audit is an independent examination. Now, why this concept of independence over here? Okay, so now you went to the bank and said, bank, and the management of the company went to the bank and said, bank, we want a loan of say 500 crore, and see, we have a profit of 700 crore. You give us a loan. What did bank say? Get out. No, we cannot give you a loan. You have to get your accounts audited from a chartered accountant, then we can do it. So management says, okay, you want report of CA? No problem. One of my relative, he is a chartered accountant. Right? I will give him a fees of 20,000 rupees. Right? I will give him a fee of 20,000 rupees and tell him, I'm applying to the bank for a loan, and then bank is saying that, you require an audit report. So can you not just give me an audit report, saying that the company accounts are all good? So relative says, okay, you will give me 20,000. They say, advance, right now take 20,000 rupees straight away, and then I will, issue the report for you. So then again, the management goes to the bank. That, see, bank, you wanted, I got accounts. You said, no, we want audited accounts. They said, see, I got audited accounts. They said, no, CA has signed the report. CA has given an audit report on the company. Now bank will ask, who gave this audit report? They say CA. Is that CA anyways connected to you? So, but yes, he is my relative only. Again, get out. Get out. They will not entertain your request only. Because why? The title of the audit report itself is Independent Auditor's Report. If you look at the title of an audit report, it's not just an auditor's report. It is an independent auditor's report. Right. So what is an audit? Audit is an independent examination. We are going to have a huge discussion regarding the independence of the auditor. Right. It's one of the very important discussions in our syllabus, the independence of the auditor. So what is audit? Audit is an independent examination. You call it examination, you call it verification, you call it checking, whichever way, right? But what is audit? Audit is an independent examination. It has to be independent. You cannot come under the suppression of the management. You cannot act as the management wants you to act. That management says, auditor, we are going to show profit of 700 crore and this is what we want you to sign. Auditor says no. Right? I will check on my own. If it is genuinely that is the case, I will sign. I have no problem. But if that is not the case, I won't be able to sign. Right? I will have to put it in my report, or I have to withdraw from the audit. So that all we will see further. Right. So audit is an independent examination of financial information. Did we just understand what you mean by financial information? It could also be called as the financial statements. Yes, it could also be called as the financial statements. And what all is included in the financial statements? All of this. Right? So audit is an independent examination of financial information of any entity. right? So it is not only that a company can be audited, it is not only that a listed company needs to be audited, it says it could be any entity, whether profit oriented or not. So whether it is a profit making organization or a section 8 company, like a not for profit making organization or an NGO, right, irrespective of its size or legal form. So it could be a company having a turnover of 1000 crore, or it could be having a turnover of 50 lakh. It says irrespective of its size or legal form. Legal form, it could be a company, it could be a partnership firm, it could be an LLP, it could be a cooperative society. In company also, it could be listed, unlisted, then it could be a private company, foreign company, small company, one person company, dormant company, association of person. It says any form, right, irrespective of its size or legal form. So what is audit? Audit is an independent examination of financial information of any entity, whether profit oriented or not, irrespective of its size or legal form. And when such an examination, the independent examination is conducted. Why this independent examination is being conducted? In order to express an opinion thereon, right? In order to express an opinion thereon. So in very layman language, in a very common man language, what we can say, okay, why audit is done? What is the objective of an audit? It's to express an opinion. We'll get into the technicalities, but this is what is the basic reason. Okay, financial statements are being prepared, and now auditor, you please just express an opinion on these financial statements. Express an opinion regarding what? Express an opinion, balance sheet, what is reflected by the balance sheet of a company? What is reflected? Yes, balance sheet of a company, what does it show? Right, the balance sheet of a company, what does it show? Assets and liabilities. So can that be called as the state of affairs? Right, the state of affairs, because we say balance sheet as at say 31st March 2024, right? So state of affairs. Profit and loss account, it reflects the profits or losses of the company. So if it's a profit making, then profits. If loss, then the losses of the company. Cash flow statement, it will reflect the cash flows of the company, right? The investing activities, operating activities, other activities, how much are the cash flows of the company? Then also the equity and the notes, right? The summary of significant accounting policies and the other explanatory information, right? So auditor, you have to express an opinion on the state of affairs of the company, on the profits or losses of the company, on the cash flows of the company. And what opinion would you express on the same? We require some term, no, to express an opinion. Like you taste some food and now you want to say that the food, you will use some phrases, some term to express your opinion. If like say the food is very good, so what phrases or what words, adjectives you can use to express your opinion about the food? Delicious, yummy, yes, tasty, right? So these are the different types of words you will use to express an opinion on the food. Also, you see a movie and then after that you give the 5-star rating, 4-star rating, or then you write your review regarding the movie, yes? Or sometimes you see a review and then decide whether to go for a movie or no, right? So now your auditor, he will also have to use a phrase, no, to express an opinion on the state of affairs, the results. Can I call profit and loss or profits or losses also as the results of the entity? Because result of the company could either be a profit or it either could be a loss, right? Just as your result, it could either be a PASS or it could be a FAIL, right? So similarly for the company, it would be profits or the losses of the company, right? So can I call it as the results of the company? Right? Can I call it as the results of the company? Right. So now, does the auditor require a phrase to express an opinion? Do you require some words to say, is it okay? Is it not okay? Are you all okay? Yes, okay. Right, so is there a phrase required by the auditor to express an opinion? Yes. And what is the phrase used by the auditor to express an opinion? True and fair. You already know it, huh? You guys are pretty smart. Okay, right. So true and fair. Right, true and fair. Once upon a time, oh, it's only my turn to speak. You don't speak. Let your results speak whenever they come out. Okay, so you don't speak in the class. Okay, right. So true and fair. Once upon a time, the phrase used by the auditor to express an opinion was true and correct. Okay. So now, when it was true and correct, that time the focus of the auditor was only on the mathematical accuracy of the books of account. You know, that is what that say cost of the asset of the company, 10,000 rupees. Cost of the asset of the company, say example 10,000 rupees, rate of depreciation 40%, 10,000 into 40%, 4,000. Is it mathematically correct? 10,000 into 40%, 4,000 rupees? Yes, mathematically correct, right? Likewise, auditor used to do all the totaling, subtotaling, carry forward, brought forward, all the calculations, and used to say, yeah, true and correct. But now in today's time, when I do an audit, am I still checking for the arithmetical accuracy? Today also, when I do an audit, will I check into so much is so much? Will I check addition, whether it is coming to so much, sales minus sales return? Will I check the mathematical accuracy? Yes, but that is only one dimension of my checking. It's not restricted to that. That is one very small aspect of what I check. Now what I also check, whether this cost of asset 10,000, whether it is proper. I said, what you're saying, cost of asset 10,000, incidental expenses have to be added to the cost of the asset. Right, so say there are some incidental expenses to bring the asset to its present condition of 2,000. So then I say 12,000 is the cost of asset. Then I say, how you took the, what you say, depreciation rate as 40%. We have to check the requirements of the Ind AS 16, of the AS 10. We also have to check the estimated useful life of the asset as per Schedule 2. Because rate of depreciation is decided on the basis of what? The estimated useful life of the asset. And then on the basis of that, we are saying the estimated useful life of your asset is how much? 4 years. So 4 years, that means every year you should be charging a depreciation of 25%. Are you understanding? So, and then I will check, okay, now 12,000 into 25%, whether now mathematically 3,000, whether that is correct. Okay, so it's now not only restricted to true and correct. We also check for the, it's what we say, the true. We also check for the financial reporting. We also check for the gap. You know what's the gap over here? Generally accepted accounting principles. An Indian gap, that is what the word we use. What is Indian gap? Generally accepted accounting principles. Maybe some of these terms would be new to you, but no problem. There has to be one time when you listen to every term for the first time. So as and when we proceed with the class, certainly you will become more and more familiar with these terms, right? So generally accepted accounting principles, right? What we have over here is called as the generally accepted accounting principles, right? We check for the generally accepted accounting principles. Right? And that is why the auditor now expresses an opinion on the true and fair view. Right? See, when I say true and correct, it means this is correct and nothing else can be correct. This is full and final. There is no second possibility or doubt about the same. But when I say true and fair, it's like, it looks fair, but you never know. And it's that type. It's true and fair. Because now we say, okay, auditor's primary objective, main bread and butter of the auditor is what? To express an opinion. And to express an opinion on the true and fair view of the state of affairs, results, and the cash flows of the entity. Is everybody able to follow the entire term now? True and fair view, express an opinion on the true and fair view of the state of affairs, results, and the cash flows of the entity. Right? So we are expressing an opinion on the financial statements. Are we giving a guarantee for detection of fraud and error? Okay, I assure you, okay, there is no fraud and error in these financial statements. No, audit does not do that. Auditor does not give a guarantee for detection of fraud and error. We will try our best. We will perform the best of the audit procedures. We will try to obtain the best of the evidence. But auditor doing an audit, auditor expressing an opinion, true and fair view, does it give a guarantee for detection of fraud and error? No, it does not give a guarantee. Yes. May the auditor come across fraud and error? May he detect any fraud or so? Yes, he might. But is it a guarantee? No, it's not a guarantee for the detection of the fraud or error. No guarantee for detection of the fraud or error. Right. So then we'll come to, we have a separate chapter also, which is called as fraud and the auditor's responsibility in this regard. We have an entire chapter. Okay, then what is the responsibility of the auditor towards fraud? If we say that detection of fraud and error is not the primary objective of the audit. What is the primary objective of the audit? To express an opinion on the true and fair view. Right. So with that, let's begin with our discussion. Like we've already had the discussion regarding the definition of audit. Right. So what is the definition of audit that we have? Audit is an independent examination of financial information of any entity, whether profit oriented or not, irrespective of its size or legal form, when such an examination is conducted with a view to express an opinion thereon. Okay, now now auditor, you have been appointed to express an opinion on the financial statements. What you need to ensure? Okay, now if anybody relies on these financial statements, like, say the bankers, they are going to use these financial statements on the basis of which they are going to decide whether to give a loan or not. If to give a loan, what should be the amount of loan which should be given to the organization? It will be decided on the basis of the audited financial statements. Now it will be decided on the basis of the audited financial statements. So what is auditor's responsibility? To ensure that the financial statements do not mislead anybody, and that the financial statements of a company, they should not be misleading to anybody. And now as an auditor, how he can ensure that the financial statements do not mislead anybody? It says this he can do, that is the auditor can do honestly by satisfying himself that. So auditor, what you need to ensure? Okay, these financial statements of the company which have been given to you for audit, and they are used by anybody, they should not be misleading. They should not mislead anybody. Okay, shareholders, they decided to, sell off their investment in the company, or they decided to put more money into the company, and that decision was taken on the basis of audited accounts, and audit opinion was not right. So obviously what will happen in that case? It will be misleading. So what auditor needs to ensure? Okay, the financial statements are not misleading. How he can ensure that? One, what did we say? Ultimately, the financial statements are prepared on the basis of the books of account. So the entire focus of the auditor is now going to come to the books of account of a company. Right? The entire focus of the auditor is now going to come on the books of account of the company, right? Books of account. Does everybody understand books of account? Right? Books of account. So one, what does it say? The accounts. Accounts means the financial statements of a company have been drawn with reference to the entries in the books of account. So the financial statements of a company, on what basis they should be prepared? On the basis of the entries in the books of account. There are some many interesting chartered accountants or many interesting people wherein, the client goes to the CA and says, CA, we want financial statements. And so then CA should ideally ask that, please give me your books of account. I will prepare the financial statements for you. Or you prepare your financial statements as per the books of account, and then I will audit. CA can either prepare financial statements or he can audit them. If CA is preparing, he cannot audit them. So your firm, if that is the situation, they need to appoint two CA. One CA to prepare financial statements and one CA to do the audit. So the point which I want to make over there is what? Case they are telling CA, please prepare financial statements of our company. So ideally CA should be asking for the books of account of the company, on the basis of which he should see how much are the asset, how much is the liability, how much is the income expense of the company, and prepare the financial statements of the company. But this CA says, just tell me two things: how much profit you want to show and how much tax you want to pay. Tomorrow morning, come, I will keep your accounts ready. I will keep financial statements ready for you. Right? I will keep the financial statements ready for you. So will such financial statements give a true and fair view? No, not at all. Rather, when we later on come to one of the requirement of Companies Act 2013, we have in audit a few sections of the Companies Act applicable which are related to accounts and audit. One of the additional, now main bread and butter of auditor is true and fair view. That is final. But one of the additional reporting responsibility of the auditor is to check whether balance sheet and profit and loss account, are they in agreement with the books of account? Whether the Yes, this comes under section 143 subsection 3 of the Companies Act. So we'll anyways later on come, but I'm telling you, okay, that is also the responsibility of the auditor. What he has to check, whether the balance sheet and profit and loss account, are they in agreement with the books of account of the company? Should not happen. Books of account of company different, financial statements of a company altogether different. They have nothing to do with each other. Right, then no, they will be misleading. Will it not be misleading in that case? They would be misleading. Okay, so accounts should be drawn with reference to the entries in the books of account. Then all the entries should be supported, right? So supporting documents for all the entries which have been passed in the books of account. That's what you said, voucher. Right? There has to be a supporting to a transaction. On what basis you recorded the sale? On what basis you recorded this purchases? On what basis you say so much is the asset of the company, so much is the debtor of the company? There should be a supporting. There has to be the supporting document. Okay. Now, say in the books of account of the company, their company has done 20 lakh sale. So in the financial statements of the company also, how much sale should be reflected? 20 lakh, right? Can it happen that books of account of the company, it is shown as 20 lakh, but in the financial statements, it is shown as say 10 lakh. So 10 lakh means what? Some of the entries have been omitted. An omission, error of omission. Some of the entries have been omitted. Or what is the sales as per the books of account of the company? 20 lakh. And then what is shown in the financial statements of the company? 30 lakh. What is not there in the books of account is also shown in the financial statements of the company. So nothing which is not there in the books of account should find its place in the financial statements. So two dimensions over there. None of the entries have been omitted. No under recording as such, and nothing which is not there in the books of account should find its place in the financial statements of the company. So not to show less also, not to show more also, just show what it is. Let's say company cash balance or company bank balance is say 10 crore. So what balance should be reflected in the financial statements of the company? 10 crore. Should they show 15 crore? No. Should they show 5 crore? No. They should show just what it is. Right? So this is the first 3 points which we have over there. The accounts have been drawn with reference to the entries in the books of account. Then entries have been adequately supported by the underlying documents and papers. And none of the entries have been omitted, and nothing which is not in the books of account has found place in the statements, financial statements, whatever you call it. Is it clear to everyone? Okay. Then after that, what does it say? The financial statements of the company. Right. So now second circle we draw over there. Right. So the financial information, the second 3 set of circles we draw now. Right, what is the second 3 set of circles over there? The financial statements or the financial information. Right, the financial information, right? So financial information of the company should be clear and unambiguous. Clear and unambiguous, that means there should be no confusion regarding what is the profit of the company, what is the sales of the company, how many non-current assets of the company, how many current assets of the company. It should be clear and unambiguous. Then the financial information should be classified, described, disclosed. It should be classified. It should be described. It should be disclosed in conformity with the accounting standards, AS, or what I can also call it as the generally accepted accounting principle, whatever you wish to call it. And the financial information should reflect a true and fair picture or true and fair view of the state of affairs, the results and the cash flows of the entity. Right? So what should the auditor ensure in order to ensure that the financial statements do not mislead anybody? Right? Do not mislead anybody. This is the first 3 set of points, and this is the next 3 set of points. That financial information is clear and unambiguous. Financial information is classified, described, disclosed in accordance with the AS, and that the financial information gives a true and fair view. Right? So information conveyed in the financial statements is clear and unambiguous. There is no confusion regarding what information is given. Financial statement amount, so I can call it as financial information, means the same, has been properly classified, described, disclosed in conformity with the accounting standards, and the statement of accounts taken as an integrated whole present a true and fair picture of the operational result. Operational result will be reflected by the profit and loss account, and assets and liabilities will be reflected by the balance sheet. So we can call it as the results and the state of affairs of the entity. Okay, now if we see, like, now we have studied one small topic over there. So how the questions come in the exam? So as you are already aware, or maybe I could tell you right now, that there are three formats in which questions come in the intermediate audit paper. Right? One, we have the MCQ format of the paper. Right? MCQ questions in the paper. Right? Second type of questions which come in the exam is regarding the correct, incorrect. And third is the theory part. Right? The theory, the writing of the answer part type of. Projector. It's come, okay. Right. So what are the type of questions which come in inter-audit paper? One, we see the MCQ type of questions. Second, we see the correct and incorrect type of questions. And then we see the theory type of questions in the exam. Right. In MCQ, we have 10 marks, 10 marks and 10 marks. Right. First 10 marks are to integrated case studies. We have an integrated, that is, they give a story over there, just as you had the comprehension passages. You remember comprehension passages, there is a paragraph given and based on that the question is asked. So here there is a situation given over there, and based on that situation, 5 questions are asked, 2 marks each. 5 questions are asked, 2 marks each. Right, so 2 integrated case studies is what you see in the paper, and apart from that you see the general MCQs, right? You see the 10 questions of 1 mark each. Right, 10 questions of 1 mark each, right? So this is 30 marks of the paper, right? So students, the moment they see MCQ, for them it's like a low-hanging fruit. And they feel, oh, MCQ, 30 out of 30. So now only remaining 10 and 20 marks to be obtained from the remaining part of the paper, right? It's like, you are taking a big position on the stock market, that today this company share, I will sell it at, at a profit of 1,000 rupees, or, I will book a loss of so much. No, too much of speculation you do in that case, right? So let's be little practical. See, obviously, who doesn't want more marks? If I thought I will get 50 and it's 70 counts, obviously who is not going to be happy? It's always the more the merrier. And no problem with excess. No, the problem is always with the shortage only. And if that 50 becomes 48 also, and the total comes and stays at 198, life becomes 6 months. Life is a matter of more 6 months over there. You have to repeat the content or so. So, that 50 coming to 48 might become a disaster. Might become. If you be careful enough, it will not become. Okay. But yeah, just because but if 50 becomes 78, why not? Why not? Means there is no problem at all. There is no discussion. So, when you study your costing and so, you have a concept over there of economic order quantity or minimum order quantity. Okay, minimum this much inventory should be there with the company at any given point of time. Minimum this much of inventory. Then if you want to keep, you keep more inventory also. But this is like the minimum inventory. So something like costing. We say these are like minimum marks. And minimum marks again, what? Don't be too minimum also. Because 40, 40, 40, 40, 160 out of 200. Again problem. You understand? No, 160 out of 200 individual cleared. Aggregate what to do? Okay, right, so then 50. I think 50 is not a bad bet over there, right? So you say, ma'am, only 40, I should get only 15 out of 30, or I should get only 20 out of 30 in MCQ. You get 30 out of 30. Who will be more happier than me? And if you get 30 out of 30. So, but I'm talking about like the, practicality. And an average I'm talking about. It's not that every student will get 15 only. There are few who might get the entire marks also, whatever. So 15 to 20, let me keep it that way, little like, normal. And this could be a normal expectation over there. Then we have correct and incorrect over there, right? So this is the 30 marks of the MCQ, and then we have 70 marks of the theory paper. In the theory paper, again, a wonderful low-hanging fruit for intermediate student. State with reasons whether the following statements are correct or incorrect, right? So that is again 7 questions asked over there of 2 marks each. So they actually give you 8 questions and they tell you solve any 7 out of them, right? So that is another, say, 14 marks of your paper, right? That is another, say, 14 marks of the paper. So 30 marks of the MCQ. Then you have 14 marks of the correct, incorrect. Are you understanding that? And apart from that, you have to answer any 4 questions out of the 5 questions, right? Any 4 questions out of the 5 questions. And these 4 questions, each question is of 14 marks, right? So that is coming to more 56 marks of your paper, right? So 30 marks of MCQ, 14 marks of correct, incorrect, and then you're given 4 questions out of those 4, and it says answer any 4 out of the remaining 5 questions. And then you are given over there the, yes, 14 marks for each question over there. And obviously this each 14 marks, it is further divided under 3 or 4 questions, like 4 marks, 4 marks, 3 marks, 3 marks. Nowadays, what they've already started doing, so in that case, it will be question number 2A, 2B, 2C, 2D. 4 mark, 4 mark, 4 mark, and 4 mark. Nowadays, what they've started doing, question number 2A, 4 mark, 2B, 4 mark, and 2C, 6 marks. Right, so either they can ask you 2 questions, or of 3 marks, or asking you 1 question of 6 marks, or something like that. So that depends, so what questions. So 4 questions into, actually each might have how many? 4 sub questions over there. Can we do it later? Okay. Right, so yes, 16 questions we have over here, plus we have the 7 questions over here, and plus in addition to that the 20 MCQs. 20 MCQ, am I right? Right, 5 questions of 2 marks, right? So that's 10 marks, 10 questions of 2 marks, and 10 questions of 1 mark, right? So we have 20 questions over here. We have 7 questions to be written over here, and then your 4 questions, say each question is having 4 questions, 4 mark, 4 mark, 3 mark, and 3 mark, right? So again, 4 4s are 16 questions, right? So 16 plus 7, say, coming to 23, and plus over here some 20 questions, right? So around 45 questions is what we need to write in the exam. So around 50 questions are asked. Why? Because there is one whole option given over there, no? And answer any 4 questions out of the 5 questions. Are you able to get the format of the paper? Right, so maybe we just look at one mock test paper just to have an idea. We obviously, hopefully we can't expect to know anything about the content, right? So we have an integrated case scenario over there, and then there are these 5 questions asked over there of 2 marks each. Then 5 questions into 2 marks each. Then we have the right, then we have the second one. Again, for second one, again what they have, 5 questions of 2 marks each, and then the general MCQ, 10 questions of 1 mark each, right? Then after that we have the question number 1 is compulsory. What is that question number 1? Right, examine with reasons whether the following statements are correct or incorrect, right? So that is a compulsory question. And then after that, attempt any 4 questions from the remaining 5 questions, right, from the rest, right? So discuss the following. So under that question number 2, 4 mark, 4 mark, 3 mark, 3 mark. Then question number 3, again 4 4, 3 3, right? Question number 4, if you see, 4 mark, 4 mark, and 6 mark. So instead of giving 4 questions over there, they've just given the 3 questions over there. And then question number 5, 6, and so. Within 6, they also give an internal option. They've also given an internal option or so over there. Right, so that's just an outline. So anyways, the point which I want to drive in over here, okay, whenever we study any topic, whenever we study any question, any concept for that matter, we need to understand, okay, what could be the type of MCQ which could be coming on the same, what are the type of correct, incorrect questions coming on the same, and also what are the theory questions coming in relation to the same, right? What are the theory questions? Like right now, we just studied the definition of audit, right? So now look over here. The basic objective of audit does not change with reference to nature, size, or form of an entity. You say correct. Because what did we say? Irrespective of its size or legal form. Do you remember that, everyone? Irrespective of its size or legal form, when such an examination is conducted with a view to express an opinion thereon. Do you understand that? It's at the end of chapter 1. Right? And towards after the chapter content gets over, you have the correct and incorrect over there. Right? So what is this answer? What you need to write? The definition of audit. Audit is an independent examination of financial information of any entity, whether profit oriented or not, irrespective of its size or legal form, when such an examination is conducted with a view to expressing an opinion thereon. It is clear that the basic objective of audit, that is expression of opinion, does not change with reference to the nature, size, or form of an entity. Is it clear? Right. And then after that, if I come to the theory questions over there, right? If I come to the theory question over there, that's an RTP. I hope you know what's an RTP, a revision test paper, which is released by ICAI before every attempt. So what does it say? The person conducting audit should take care to ensure that financial statements would not mislead anybody, explain stating clearly the meaning of audit, or what the auditor is supposed to do to satisfy himself that nothing contained in the statements will mislead anybody. So you need to have that association, that link. So we always, whenever we study a theory subject, we always have to establish a link between what is the theory that I just studied and what type of question could be coming in the exam. And if this question comes, this is the answer which I need to write. Because many times for the student, it is fragmented. They know all the theory, they know the entire story of what happens in an audit, but they don't know in the exam what question is coming, what is to be written in the answer. No clue about that. And then after the exam, some intelligent student comes out and say, oh, that was that question in the book on that. Oh, was it that? I didn't know only. Oh, then now after 6 months you will know. Okay, anyways. So after 6 months, anyways, that question is not going to come again. So it's like, literally, like in school days, we had the states of India and the capital of the various states of India. So we had to do the match the following, which state, which is the capital, which state, which is the capital. So it's like, all the states, all the capital, but the biggest confusion in this in the seven sisters. And that are the seven sisters, that is the Mizoram, and then you have the Arunachal Pradesh, Assam, and all over there. Right? So which are the capitals? So we need to work on that. Anyways, we don't need to remember what are the capitals right now, but I'm just telling you, okay? That is the context. So yes, when you prepare a particular topic itself, you take it to the end goal. You don't keep it, okay, today I will study the theory and then one day I will see what questions are coming regarding that. No, you establish a link, just as a train, all the coaches are put together of all the train and they take the entire train along with them, no? Or do they say 2-3 coaches, you stay back? Why all of you want to come with us? You stay back. No, they establish a chain, no? They keep a link and they ensure. Otherwise, for students, that is what happened. By the time you reach the 7th or 8th chapter, they don't know where first chapter was left away. And they will forget, oh yeah, you were also traveling with us. I forgot only, come. And so that's, you have to keep on ensuring that, as and when you go to the next chapters, that the other coaches of the train engine, they are also attached. And only with the fully occupied train, you reach to the railway station of the exam hall. Okay, right. So that is first regarding the definition of audit. All of you, all good? Right? Yes, all of you, all good? Does everybody in the class know that I just talked about, what are the type of questions coming in the exam? Or how many of you think that, oh, ma'am is just discussing the definition of audit? Now, you all know. Okay, so that's pretty good, not bad. Okay, right. So now let's come to the next part of the discussion over there regarding what is the objective and what is the scope of an audit, right? So now we get into the further detailed technical discussion regarding what is the objective of an audit. Right? So what is the objective of an audit? And now, this objective, see, I told you, layman language, what you can say? Express an opinion, true and fair view. Okay, so that's fair enough. But now in technical language, if I have to see, okay, oh, I have been appointed as an auditor of an entity, what is the objective of the auditor? So that objective of the auditor has been given in a standard on auditing. Okay, right. So now let's come to the next context of our understanding. Just as, okay, what term had we taken today in the beginning? Audit of the financial statements. Is it right? That was the very basic term with which we started today. Audit of financial statements. Now let's give one more dimension to it. Audit of the financial statements. How would a company, we've already said, no, that management, company, entity, they will prepare financial statements. How will they prepare financial statements? As per the generally accepted accounting principles. Am I right? Which I can also call it as the AS, accounting standards, or if Ind AS is applicable to the company, then Ind AS. Right? Financial statements have to be prepared in accordance with the AS, in accordance with the generally accepted accounting principles. Accounting standards have been issued by the ICAI. And accounting. Okay, how can I do the accounting for inventory? So AS2 valuation of inventory gives you two options. Either do FIFO or go for weighted average. If you want to do the depreciation of the assets, what does it say? WDV or the straight line or any other method which could show the best way. of depreciating the assets of a company. So within the accounting standard also there are options given, but you can't go beyond the accounting standard. Like accounting standard AS2 allows you to follow FIFO or weighted average. So if you follow FIFO or weighted average, both of it is okay. Either or is okay. But if you follow LIFO, then that's not okay. If the entity follows LIFO for valuation of inventory, then we will say no. AS2, there is a non-compliance with AS2. There is a deviation from the prescribed accounting policies in AS2. Do you understand that? There is a deviation. Okay. So just as to prepare the financial statements of a company, accounting standards are required. Are you all listening to me? Just as to prepare the financial statements of a company, accounting standards are required. Similarly to do an audit of any entity. So even if I say company is just an example. You get me right. Similarly, to do an audit, we require the standards on auditing. We have the standards on auditing which have been issued by ICAI, right? ICAI, it has the AASB. What is AASB? The Auditing and Assurance Standard Board. The Auditing and Assurance Standard Board of ICAI. Do you understand what is this? AASB, Auditing and Assurance Standard Board of the ICAI, which has issued the standards on auditing. And obviously, as the name implies, when these standards are to be followed while doing an audit. Right? What do you mean by a standard? Like a literal meaning of the word standard means some sort of a standardization is what we mean to say over there. Like say auditor has to issue an audit report. Is it right? Now before I start with my audit, should I make the terms and conditions of the engagement clear with the management? Right? Should I make the terms and engagement clear with the management? Okay, so when I finish an audit, I have to issue an audit report. Okay, yes, so a chartered accountant is qualified to do audit of a company. So can any CA be qualified to do the audit of a company? Yes, if he can maintain the independence, any chartered accountant can do the audit. Like just for example, I'm taking over here the example of the Big Four. Right? There are thousands of CA firms in India. There are thousands of sole practitioners also in India. But just I'm taking the example of the Big Four, right? So that you have some knowledge also, like what are the Big Fours over there, right? So we have Deloitte, we have KPMG, E&Y, Ernst & Young, and the PricewaterhouseCoopers. And then you also have the top 10 and top 20 firms, and then there's a mid-size firms and all of that. Okay, so whether Deloitte does the audit of Geo Limited, or KPMG does the audit of Geo Limited, or E&Y does, or PwC does an audit of Geo Limited, any one of them, why these Big Four? Any CA firm, if they do the audit of Geo Limited is the example that I have taken. Okay, Geo Limited is the company example that I have taken. Any of the auditor doing an audit, do they have to issue an audit report? An independent auditor's report? Okay, now before 1980s, there was no auditing standard. And before 1980s, there were no auditing standards. Before that, then 1980s, they came up with the SAP, the Statements on Auditing Practices. The Statements on the Auditing Practices. Then they were renamed to be called as the AAS, Auditing and Assurance Standard. And now they are renamed to be called as the SA, Standards on Auditing. So before 1980s, there was nothing called as standard. Then the standards were released by ICAI called as the Statements on Auditing Practices. Are you all with me? Statements on Auditing Practices. That time there used to be SAP 1, SAP 2, SAP 3. Then there was the AAS, the Auditing and Assurance Standard. So we had the AAS 1, AAS 2, AAS 3. Rather, when I had written my exams, that time what we had was AAS, Auditing and Assurance Standards. Right. And then after that, now they have been renamed to be called as the SA. Now you have the standards on auditing. Okay, so now before 1980s, like say when the auditor had to issue a report, was there any format of the report? Was there any standardization regarding how your report should look like? No, each auditor, as he thinks that, oh, I think I should report in this manner, he would report in that manner. Or this auditor thinks, no, this is how I think I will do the checking. Accordingly, he would do the checking. But now what they did, they brought about some sort of a standardization, giving you the basic format example of an audit report. audit report, there should be title, there should be an addressee to whom you're writing your letter to, then which paragraph, then which paragraph. They've given the contents of the audit report, right? So do you understand the benefit of an auditing standard? So whichever CA firm, so whether any of the big four, they do the audit report is going to be in a particular format only. What opinion they express, that is going to be based on the financial statements which are being audited. If they find them to be true and fair, they will express an opinion saying true and fair. If they say they are not true and fair, they will say in the report, okay, oh, these financial statements are not true and fair. They do not give a true and fair view. And we will come into what are the types of opinion which can be expressed by the auditor. So anyways, what point I want to bring in over here, okay, auditor, when you are doing an audit, can you do an audit as you wish? No, you have to do the audit in accordance with the auditing standards, the standards on auditing. Just as the company, if it has to prepare its financial statements, can it prepare its financial statements as it wish? No, they have to prepare as per the accounting standards, and within the accounting standard, whatever option is given, for that as they wish. Like within the accounting standard, you have option of FIFO or weighted average. So then it is as it wish. But are they confined by the accounting standard? Yes, they are confined. They are restricted by the accounting standard. So similarly, we have the auditing standards. Okay. So now earlier these auditing standards was AS1, AS2 and so. Now the auditing standards, there is a renumbering of the auditing standards done to bring them in line with the international standards on auditing. So just as you have an essay which is to be followed in the Indian context, there is also an international standard on auditing. And the sequencing or the numbering which is followed by the international standards, similar numbering and sequencing has been done by the national standards also. Like in the international standards, we have an ISA 200. So similarly, in the Indian context, we have an SA 200. In the international context, we have an ISA 210. So in the national context, we have the SA 210. Right, we have the SA 210. So there is a lot more. Its standards on auditing is just one variety of the standards which is issued by the AASB. There are many other varieties of standards. As such, there are 46 standards, out of which 36 are standards on auditing, and out of that 27 are applicable for CA intermediate. Right, so as such, what total standards have been released by ICAI are 46, not only auditing but other dimensions also. I'll come to that later. Right, out of that, how many are the auditing standards? 36 auditing standards. And are all 36 applicable for intermediate level? No, only 27 standards on auditing is 26 standards and 1 standard on quality control, which is applicable at the intermediate level, right? So 27 standards. So what we do when we are studying our chapter number 1 to 9, right? We cover 17 standards over there only. And then towards the end of the syllabus, we cover 10 other standards, right? So it doesn't matter to you when they are covered. More important, they have to be linked with the concept and proper understanding. Right? So we don't do a different discussion of these standards. We integrate it into the discussion of our theory itself, right? When we are studying the chapters itself. Okay. Why I'm telling you this entire story? Because the overall objectives, what's the next heading that I have brought in over here? The objectives of the audit have been given in essay 200. And what is the title of essay 200? Right? Essay 200. Which 100? 200. How many 100? 200. No, 200. 100 and 100. Essay 200. How many 100? 200. How many zeros? How many zeros? 2 zeros, right? So 2 zeros, we can take it as 2 O's. And what are the 2 O's? Overall objectives, right? The overall objectives of the independent auditor. Overall objectives of the independent auditor. And you say, okay, you just tell me what is the overall objective, I will do the audit. You tell me, no, what is it that is to be achieved? I will achieve it. No worries. You say, wait. And the conduct of an audit. You say, I will do the audit. Don't worry. You say, no, I have a lot of worry. And the conduct of an audit in accordance with the standards on auditing. So auditor, how you will do the audit? You will do the audit in accordance with the standards on auditing. You know, rather when we issue our audit report, Auditor, end of audit, he issues an audit report. In our audit report, there is one sentence over there. In our audit report, we'll see the contents of audit report also. But in our audit report, we have to write down one sentence. What is that one sentence we have to write down over there? We have, auditor, audit firm, we have conducted our audit in accordance with the standards on auditing. So we have not done the audit as we wish. We have done the audit in accordance with the standards on auditing. And who says that you have to do the audit in accordance with these standards? Essay 200. What is the title of Essay 200? Overall objectives of the independent auditor and the conduct of an audit in accordance with the standards on auditing. Okay, right. So now let's try to understand what are the overall objectives of the auditor. What are the overall objectives of the independent auditor, right? So first few, the understanding of the subject has to be developed. Once we understand the subject, then any other, dimensions or study of it, that becomes convenient. But first we have to understand what exactly is happening in an audit. Okay, right. So what are the overall objectives of the independent auditor? Okay, so now say there are a lot of departmental stores which are there right nowadays, like there is Reliance Fresh, then there is D-Mart, and then there is Big Bazaar, and then you have so many multiple online options also, like Blinkit, and then you have the Milk Basket, and then the Big Basket, and Amazon groceries, and Flipkart groceries, and so many of them, right? So many of the online portals. Okay, but then say you generally see that your family, they purchase the grocery, or you go for purchasing the grocery to say D-Mart. Just as an example, I'm taking over there. So then if anybody asks you, okay, why you go to D-Mart only? And why not you go, there is another grocery store next to your place, or here or there. So why you're not going there, but why going to D-Mart? So generally what we happen to say that the prices over there are reasonable. Reasonable. That means, say, a packet of biscuit which is of 10 rupees, there you don't get it at 10 rupees, you don't get it at the MRP. It's not that you get it over there for 2 rupees also, but you get it over there for, like, say, 9 rupees 50 paise, or you get it for 9 rupees or so, something like that. You understand? No. So the price is not absolute. Like, what is the MRP? It's not at the MRP. It's not that the price is very, very low also. The price is high only, but it is not 100%. Are you understanding? What we say, the prices are reasonable. Okay. Similarly, now in an audit, what is your overall objective? Are you all with me? Similarly, now in an audit, what is the overall objective of the auditor to obtain? So when I go in an audit, just as a person, when they go to the Himalaya, what they want to obtain by going to the Himalaya? They want to obtain liberation. They want to obtain moksha by going to the Himalayas over there. So similarly, now auditor, what you want to obtain in an audit? Auditor wants to obtain the reasonable assurance. What assurance he wants to obtain? Reasonable assurance, right? What assurance he wants to obtain? You're not saying it correctly. What assurance he wants to obtain? Reasonable assurance. You say reasonable also in a reasonable manner. No, you're saying reasonable assurance. It doesn't sound reasonable. It has to sound reasonable also. No. Right. So what is the overall objective of the auditor to obtain? Perfect. Right. Reasonable assurance. Now, assurance regarding what? That's the name of our subject also. Auditing and assurance. Now, assurance regarding what? Right? Listen to me very carefully. You know what happens the moment you don't listen to me? No, that comes in the exam. So, I don't know. Somehow it is manifested that way. So if you say, ma'am, if we continuously listen to you, nothing will come in the exam. So no, reasonable. Okay, right. So to obtain the reasonable assurance that. Now, reasonable assurance regarding what? Reasonable assurance that the financial statements are free from material misstatement. Now, these are like the big terms of audit over there. Free from material misstatement, whether due to fraud or error. Right. What are we studying? The overall objectives of the independent auditor is to obtain a reasonable assurance that the financial statements, have you understood financial statements? Yes, that they are free from material misstatement, whether due to fraud or error. Thereby, so once you get that, reasonable assurance that the financial statements are free from material misstatement, whether due to fraud or error, thereby enabling the auditor to express an opinion, which enables the auditor to express an opinion. What? That the financial statements have been prepared by the management, because whose responsibility preparation of financial statements? It is the responsibility of the management to express an opinion whether financial statements have been prepared by the management in accordance with an applicable financial reporting framework. Right? The applicable financial reporting framework. Right? Applicable financial reporting framework. And then what does it say? Once you are enabled to express an opinion, then what you do? You report, yes, in accordance with the essays based on the findings of the auditor. Right, so we'll try to understand this one by one now. Right, so what we have done, what is the objective of the auditor? To obtain the reasonable assurance that financial statements are free from material misstatement, whether due to fraud or error, thereby enabling the auditor to express an opinion as to whether or not the financial statements have been prepared by the management in accordance with an applicable financial reporting framework, and then to report, right, in accordance with essays, whatever are the findings of the auditor, right? Whatever are the findings of the auditor. These are the overall objectives of the independent auditor. Reasonable assurance about whether the financial statements as a whole are free from material misstatement. Okay, in the same chapter, we also have the discussion of Essay 200, right? So here it's given more in detail to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error, thereby enabling the auditor to express an opinion whether financial statements are prepared in all material respects in accordance with the AFRF. What do you mean by AFRF? Applicable Financial Reporting Framework. And then to report on the financial statements and communicate as required by the essays in accordance with the audit findings. Right, in accordance with the audit findings. So there they had just given a part of it in essay 200, the entire one. So why not integrate the discussion at one place? You know, why not integrate the discussion at one place? Right, so everybody, have you seen what is the overall objective of the auditor? Now, we have three terms over there. Reasonable assurance, free from material misstatement, whether due to fraud or error, and the applicable financial reporting framework. Right, so one by one we will try to understand each of these terms so that we will be in a position to understand what is the overall objective of the independent auditor. Right, so this is like technical, no? When we say express an opinion, true and fair view, that was quite simpler as compared to getting into the technicals over there. And just it's coming to my mind, hence I thought of telling it, that I just finished an inter fast track, and then one of the student, he, wrote an exam, and then he got the paper from IC, and so, and then very clear, one line of analysis regarding how the expectations of ICAI are. The student said that, ma'am, wherever I have written as per the ICAI wording or the ICAI language or the technical terms in my answer, I have got the marks. Wherever I have written in my own words, they have put a cross. So as simple as that. So it's better for you to learn from others' mistake rather than do mistakes on your own and to learn from the same also. Okay, whenever you write in the technical language, you get the marks. You write in your own words, you don't get the marks, right? Because that's the expectation of ICAI, that you write in the technical words, right? The technical language. And see, you will not be able to write in technical language if you don't know technically what it is. Right, if you don't understand what it is about. Okay, right. So now let's pick up the first term over there, free from material misstatement, right? So let's try to understand free from material misstatement. Okay, right. So let's try to break up. And first it is misstatement. And free from material misstatement. Let's break these words. First, let us only pick up the word misstatement. What do you mean by a misstatement? Wrong statement, incorrect statement, something which is not right is misstatement, wrong statement. Can we think, yes, not as it should be, okay? Right, so misstatement and a wrong statement is what we are saying over here. And this we are talking in the context of the financial statements, that financial statements are free from material misstatement. So what does it say? Misstatement could be due to fraud, or it could be due to error. It could be intentional or it could be unintentional. It is only the intention which decides whether it's a fraud or an error. And an error done intentionally becomes a fraud. Error done intentionally would become a fraud. The demarcating factor of whether a particular event is it a fraud or an error is only to check the intention behind it. Right? Is only to check the intention behind it. Okay. So misstatement. What you saw, that valuation of inventory which has been done by the management, they are saying that the value of our inventory is 200 crore. Now, when I go for an audit, will I do the checking of this valuation of inventory? One of the part which I will check in my audit, obviously I have to do audit of entire financial statements, but one of the item which I will also check, is it going to be inventory? Right, so inventory valuation 200 crore. At valuation of inventory 200 crore. This is what has been recorded. This is what is the value as per the management. As an auditor, I go and I do the checking. I will check as per AS2. I will check what is raw material, work in progress, finished goods and all of that. And then I say, yes, you are right. Your value of your inventory is 200 crores. So in that case, there is no misstatement. It is the right statement. But say I do the audit and I say, management, what you are telling your inventory value is 200 crore. According to me, the value of your inventory is only 180 crore. So now what is it? There is a misstatement in the inventory. There is a wrong statement in the inventory. Are you understanding? Another example, say contingent liabilities, litigation. You understand? Litigation, some disputed statutory due, and a GST, how much amount of GST to be paid, there is a dispute. How much amount of income tax to be paid, there is a dispute. Okay, say company, 7 disputes are going on. Company, if you go to the notes to account, you see their contingent liability, you see 7 litigations being disclosed over there. You have a discussion with the management, you look at the minutes of the meeting of the company, and you say, what you are saying, 7 disputes are there. You have 10 disputes going on. So 3 disputes have not been disclosed in the financial statements of the company. So again, is it a misstatement? Again, is it a misstatement? Yes, the very simple example I gave you today. Okay, how much is the sales of the company? 20 lakh. How much have they shown in the books of account? 10 lakh. Or how much have they shown in the books of account? 30 lakh. Is that a misstatement? Yes, that is a misstatement. That is a wrong statement. So what do you mean by a misstatement? It says it is a difference between what is and what should be. What is the definition of a misstatement? It is the difference between what is and what should be. Right? Difference between what is and what should be. In my example, how much was inventory? 200 crore. And how much was it should have been? 180 crore. So the difference between the two, 20 crore is a misstatement. Is it clear to everyone? Difference between what is and what should be is a misstatement. What is AS not followed? What should be? AS should have been followed. Difference between the two, misstatement. What is disclosures not given as per schedule 3? What should be? Disclosure should have been given as per schedule 3. What is it? Again, a misstatement. Difference between what is and what should be. Okay, now let's come to what is material misstatement. What do you mean by material? Materiality, any item or information which might influence the decision making of the users of the financial statement. Later on, we'll study a separate auditing standard also, SA 320, which is regarding materiality in planning and performing an audit. So that time we will discuss, okay, when I'm going for the audit of Geo Limited, how do I determine materiality? Or tomorrow I'm appointed as the auditor of Tata Motors, how will I come to know what is materiality? So we will discuss that time. But right now, just randomly, I'm saying any information about 10 crore, it influences the decision making of the users. I'm just taking an example right now. Okay, any information, any amount which is above 10 crore, it affects the decision making of the users. Below 10 crore doesn't matter. It's not material type. Are you understanding that? Okay, so now how much is the misstatement in inventory? 20 crore. You remember, no, what is 200 crore? What should be 180 crore? Difference between the two, 20 crore. How much is materiality in my example? 10 crore. So is this a material difference between what is and what should be? Right? Material difference between what is and what should be? Yes. Say materiality was 30 crore. Say materiality was 30 crore. Then I'll say this is just a misstatement. This is not a material misstatement. I hope you understand that. Okay. And now look at the third word over there. Free from material misstatement. That means what? There is no material difference between what is and what should be. That means what? There are no material fraud and error in the financial statements. Because what is misstatement? Fraud or error, is it? What is misstatement? Ultimately, it is fraud or error. So if I say free from material misstatements, that means free from material fraud or error. Do you understand that? Free from material misstatement, that means there is no material difference between what is and what should be. That means there are no material fraud or error. And regarding this, auditor, you have to obtain a reasonable assurance. Okay, these financial statements of the company which have been given to me for audit. And what are these financial statements? Balance sheet, profit and loss, cash flow notes. What I have to do? I have to obtain a reasonable assurance that they are free from material misstatement, whether due to fraud or error. Is it clear to everyone? Okay, right. Thereby enabling the auditor to express an opinion that financial statements have been prepared by the management in accordance with an applicable financial reporting framework. Oh, again, this is a very important term in audit. The applicable financial reporting framework. Right? What do you mean by financial reporting? Right, financial reporting, CA final group 1 accounts is called as FR. And a CA final group, like right now we have accounts and advanced accounts. CA final group 1 first paper is what? FR. What is FR? Accounting. And a financial reporting. So applicable financial reporting framework. Can I call it as the applicable accounting framework? Can I call it as the applicable accounting framework? Right, then obviously BCR students, they also know how to convert an active voice to passive voice. So how would you convert applicable accounting framework to passive voice? A framework to be applied while doing the accounting. Is it? What is applicable financial reporting framework? The framework, the laws and regulations which are to be applied by the management, because whose responsibility preparation of financial statements? It is the responsibility of the management. So applied by the management in doing the accounting, in the preparation of the financial statements. Is it clear to everyone? The framework, the laws and regulations which have been applied by the management in the preparation of financial statements, that is what you mean by applicable financial reporting framework. Example, for an Indian company which has to prepare its financial statements, what framework, what laws and regulations should be applied in the preparation of financial statements? Yes, Indian company wants to prepare financial statements. What framework, what laws and regulations it should keep in mind while preparing the financial statements? The AS or the Ind AS, depending on the applicability. And in addition to that, they have to prepare the financial statements as per the Schedule 3 to the Companies Act. So Ind AS and Schedule 3 can be an example of an AFRF. It's an example of an AFRF. So what we said as today, generally accepted accounting principle. So that is in more technical language, AFRF. An applicable financial reporting framework. Do you understand that? Okay. Say there is an Indian company. There is an Indian company. This Indian company will prepare financial statements as per accounting standards, AS, Ind AS, and Schedule 3. Say, example, this Indian company is also listed on the US stock exchange. So it is listed on the Indian stock exchange and it is also listed on the NASDAQ. It is also listed on the US stock exchange. So now this Indian company will have to submit its financial statements to the Indian stock exchanges also, and they will have to submit their financial statements to the US stock exchange also, to NASDAQ, to the Securities Exchange Commission. Just as in India you have SEBI, there you have the SEC. Okay, so now to submit to Indian Stock Exchange Authority, the company can prepare its financial statements as per the Indian Accounting Standards and Schedule 3. That would be the AFRF, the Applicable Financial Reporting Framework. But to submit to the US Stock Exchange Authority, can they submit the Indian GAAP financial statements to the US Stock Exchange Authority? No. Then to submit to the US Stock Exchange Authority, they will have to prepare their financial statements as per the US GAAP. And all Indian companies which are listed on US Stock Exchange, they also prepare their financial statements as per US GAAP. So in that case, US GAAP is the applicable financial reporting framework. Do you understand that? In that case, US GAAP would be the applicable financial reporting framework. You understand what I say? Say there is an Indian company. This Indian company, it's a subsidiary of a company and the holding company is in Germany. Say holding company is in Germany and subsidiary company is in India. So now Indian company, Indian subsidiary to submit financial statements to ROC, Registrar of Company. They will prepare as per accounting standards and Schedule 3. But they have to submit their financial statements to the holding company in Germany. They have to prepare, yes, submit their financial statements to the holding company in Germany. Then they will have to prepare their financial statements as per the German GAAP, right? So there could be different applicable financial reporting framework. Now, generally, an Indian company will prepare financial statements as per accounting standard Schedule 3. That's like the thumb rule. Nothing great about it. It's normal. Okay, generally, every Indian company will prepare financial statements as per accounting standards and Schedule 3. So that would be an example of a general purpose framework. No great shakes about it. It's normal. That's a general purpose framework. But say every Indian company will not prepare financial statements as per US GAAP. Every Indian company will not prepare financial statements as per German GAAP. Are you understanding that? So Indian company preparing financial statements as per German GAAP or as per US GAAP, then that's just an example, would be an example of a special purpose framework. It would be an example of a special purpose framework. So for the applicable financial reporting framework, it could be a GPF or it could be an SPF. What is GPF? General purpose framework. What is SPF? It could be a special purpose framework. Are you understanding that? Okay. Right. So what are we analyzing right now? The overall objectives of the independent auditor. So what terms have we understood so far? Free from material misstatement and the applicable financial reporting framework. So do you understand? To obtain reasonable assurance that financial statements, there is no material fraud or error, so that you can express an opinion that financial statements are prepared in accordance with the AFRF. Okay, express an opinion that financial statements are prepared in accordance with the AFRF. Okay, now again, just for a little bit of practical understanding or correlation, Section 129 of the Companies Act. Not too much of worry if we don't get it completely today, because later on we will discuss Section 129 of Companies Act also. But say Section 129 of the Companies Act 2013 is regarding financial statements. It is regarding the financial statements. And 128 is books of account. 129 is regarding the financial statements. 130 is reopening of accounts. 131 revision of financial statements. So anyway, Section 129 of Companies Act is regarding the financial statements. And what does it say? Okay, when will the financial statements of a company be considered to be giving true and fair view? It says you can assume that the financial statements of a company give a true and fair view if they are prepared in accordance with accounting standards and Schedule 3. This is how 129 mentions about financial statements giving a true and fair view. What does it say? A company should prepare financial statements that give a true and fair view. And in order to give a true and fair view, they should be prepared in compliance with the AS or Ind AS, what is applicable to the company, and Schedule 3 to the Companies Act. Right. So indirectly, what is the learning for the auditor? If as an auditor, I have to express an opinion on the true and fair view. That's what we said, no? It's the bread and butter for the auditor. Auditor has to express an opinion on the true and fair view of the financial statements. Will not the auditor have to check compliance with Accounting Standard Schedule 3? Because that is how true and fair has been defined under Companies Act. Are you able to get the correlation? Section 129 of the Companies Act. What does it say? Financial statements will give a true and fair view if they are in compliance with Accounting Standard Schedule 3. What we have just understood, Accounting Standard Schedule 3 is nothing but a AFRF. And if they are prepared as per Accounting Standard Schedule 3, that means they will give a true and fair view. So once I check that financial statements are prepared as per AFRF, can I express an opinion saying true and fair? Once I check whether financial statements are prepared as per AFRF. So what is the AFRF in my example? Accounting Standard Schedule 3. Can I express an opinion saying true and fair? Yes, I can express an opinion saying true and fair. But little bit of a twist over here. Okay, if a company has prepared financial statements as per AS and Schedule 3, can I express an opinion saying true and fair? Yes, auditor, you can express an opinion saying that the financial statements give a true and fair view. But say as an example, a company has prepared financial statements only as per AS, not as per Schedule 3. And they have prepared only as per the AS. They have not prepared as per the Schedule 3. Or a company has prepared financial statements not as per Ind AS, but as per US GAAP. Or they have prepared as per the German GAAP. Now, auditor, can you express an opinion saying true and fair? No. Why? Because for true and fair, it has to be accounting standards and Schedule 3. Only accounting standards also, I cannot say true and fair. German GAAP though out of question, because Indian Companies Act, it says Ind AS. It doesn't say German AS, German AS or so. Right? So in that case, but even in that case, will I have to express an opinion? So submit to US Stock Exchange Authority. Companies preparing US GAAP financial statements. They are saying, CA, please do the audit. Give us a report. Will auditor do the audit? Will he express an opinion? Yes. But what phrase will now be used by the auditor to express an opinion? Prepared. Prepared. Okay, have these financial statements been prepared by the management as per AS? Yes. Have they been prepared as per US GAAP? Yes. Have they been prepared as per German GAAP? Yes. Are they true and fair? Don't ask, we don't know. You understand? No, that we can only say exclusively for accounting standards and Schedule 3, or in accounting standards and Schedule 3. For others, what we will say? We will express an opinion saying prepared. Right. So generally for a special purpose framework, we express an opinion saying prepared. Whereas for a general purpose framework, we express an opinion saying true and fair view. Is it clear to everyone? So main bread and butter normally is what? True and fair. Sometimes it might be prepared. Right? So that's what they mean, no? Thereby enabling the auditor to express an opinion as to whether financial statements are prepared by the management in accordance with an applicable financial reporting framework. So if the applicable financial reporting framework is only AS, then what opinion auditor will express? If applicable financial reporting framework is only AS, then what opinion auditor will express? Prepared. If it is AS and Schedule 3, then auditor will express an opinion saying true and fair view. Is it clear to everyone? And then to report and communicate in accordance with the essays, whatever are the findings of the auditor, right? So that is the last part of the sentence. So what words have we seen so far? Free from material misstatement, applicable financial reporting framework. So now what word we need to see? Reasonable assurance, right? Reasonable assurance, right? Reasonable assurance. Now, how reasonable assurance has been defined as? It says reasonable assurance is a high level of assurance. So it could be like 90, 95, 99.99, whatever in your professional judgment is high, but it cannot be 100%. It is a Not a 50-50 or a 30-40 type. It's like a high level, but it is not an absolute assurance. It is a high level of assurance, but it is not an absolute assurance. So can an auditor give a 100% assurance that these financial statements are free from material misstatement? No. I also told you today, okay, no guarantee for fraud error detection. An auditor doing an audit, does it give guarantee for detection of fraud and error? No. But do we give a reasonable assurance that mostly there is no fraud and error? Can you say it 100%? No. But can you say it 90%, 95%? Yes. Right? So reasonable assurance is a high level of assurance. How reasonable assurance has been defined as? It is a high level of assurance, but not an absolute assurance. Right? So now let's try to look into what is the overall objective of the auditor to obtain reasonable assurance, which is a high level but not 100%. What does it say? Reasonable assurance that financial statements are free from material misstatement, whether due to fraud or error, thereby enabling the auditor to express an opinion as to whether or not the financial statements have been prepared by the management in accordance with an applicable financial reporting framework, and then to report and communicate as required by the essays in accordance with the auditor's findings, right? So do I issue a report as I wish? No, I have to give the report in accordance with the standards on auditing, and again based on my audit finding. If I have a finding, I may say not true and fair also. And if there is no finding, no material misstatement, I will express an opinion saying true and fair view. Is it clear to everyone? Reasonable assurance that financial statements are free from material misstatement. So these are the company financial statements given to me for audit. What is my overall objective of the audit? I have to, by doing my audit, obtain a reasonable assurance, which is a high level of assurance, but not an absolute assurance. Reasonable assurance regarding what? That these financial statements are free from material misstatement, whether due to fraud or error. That means there is no material fraud or error in these financial statements. There is no material difference between what is and what should be, thereby enabling the auditor to express an opinion as to whether or not the financial statements have been prepared by the management in accordance with an applicable financial reporting framework, and then to report the FIS as required by the essays in accordance with the audit finding. Right? Just one final check whether you've understood the overall objective. Yes, so can I say so? Okay, for the financial statements to give a true and fair view, for auditor to express an opinion, say, assuming it is the accounting standard and schedule 3. So generally we assume that only. So now as an auditor, for me to express an opinion on the true and fair view of the financial statements, should not the financial statements be free from material misstatement? Should they not be free from material fraud or error? Because if there is a material fraud and error, can I express an opinion saying true and fair view? No, I will not be able to express an opinion true and fair view. So in order to express an opinion, the auditor will have to obtain reasonable assurance that financial statements are free from material misstatement. Are you able to interlink the two? That obviously in order to express an opinion, I need to check that and what opinion I need to express? True and fair view. In order to that, I have to ensure that the financial statements are free from material misstatement. Because if there are material misstatement, there are material fraud or error, say these financial statements of the company, there is material fraud, there is material error. Can I express an opinion? Should I express an opinion saying true and fair view? No, you should not express an opinion saying true and fair. Right, so that's the overall objectives of the independent auditor. And then we also have over there the discussion of the AFRF. What is AFRF? The framework adopted by the management, the financial reporting standards. Indian example, what would be in India? Accounting standards and schedule 3. Right, what is reasonable assurance? What did we say? It's a high level of assurance. It's not an absolute level of assurance. Right, we'll come to more of this further also. Right? Did you understand so far? Okay, now let's get into some other discussions of SA 200. Right? So right now we continue with our discussion of SA 200. Okay, so now CA says, okay, I know what are the overall objectives to be achieved by the auditor. I will do it. It says no auditor. Whenever you have to achieve the overall objective, whenever a chartered accountant, an auditor has been appointed to do the audit. Whenever he has to achieve the overall objectives of the auditor, there are certain ethical requirements, including independence, to be complied. There are certain ethical requirements, including independence, which are required to be complied with, right? Ethical requirements including independence, right? These ethical requirements are also called as the fundamental principles to be followed by a professional accountant, right? The fundamental principles, right? Ethics, right? What do you mean by ethics? Right, the moral values. And now if we talk about professional ethics, right, the ethics associated with a particular profession, like every profession would have their ethics. Like for a doctor, would there be some ethics that they should give the right treatment to the patient? Right, for an engineer, would there be ethics that they should not be doing any malpractices also? Similarly, for chartered accountant also, there would be some ethics. Right, so in CA final, rather, audit is called as advanced auditing and professional ethics. Right, so there are some ethics associated with each and every profession, like let it be doctor, medicine, law, or any other profession also. Similarly, for the CA also, there are some ethical requirements to be followed. Right, so ethical requirements also called as the fundamental principles, including independence. So obviously, independence is like the keystone. Independence is the most important requirement. Now, what are those ethical requirements to be followed by a professional accountant? Yes, professional accountant. Chartered accountant is a professional accountant. So they also call it as the professional accountant. It says integrity. What is the first ethical requirement? Integrity. Second one, objectivity. Right, so again, an exam question, right? Ethical requirement, right? So integrity, objectivity. Then you have PCDC. What is PCDC? Professional competence and due care, right? PCDC. What is PCDC? Professional competence and the due care. Next one, the confidentiality. And the next one, the confidentiality. And the last ethical requirement for a chartered accountant is that of the professional behavior, right? Professional behavior. Right? So ethical requirements, including independence. Independence, we discuss it separately. Right now, we are only talking about the ethical requirements, right? So what is the first ethical requirement for a chartered accountant? Is that he should be a person of integrity, right? He is checking the accounts of the company and he knows that the actual sales of the company is only 1,000 crore. How much sales have they shown in the books of account? 1,500 crore. Why? In order to show a profit of 700 crore, in order to get a loan from the bank. Do you remember that situation? Auditor, CA is appointed to do the checking. He sees that, oh, this company, what they are showing sales of 1,500 crore, their actual sales are only 1,000 crore. So auditor says, no, I need to report this to the management. Management says, auditor, if you do like this, then we will not appoint you next year. So then you will not appoint me next year. Okay, no problem. True and fair. Everything is okay. Right? So in this case, oh, your standards are so low that just for, the fear or the temptation of losing a particular client or just for getting some audit fee, you immediately say, okay, then I will say true and fair. No problem. Take a bank loan. So no. Right? Then in that case, there is no integrity at all of the chartered accountant. So integrity, it says he should be straightforward. And there should be, the accountant, the chartered accountant, he should be straightforward, right? Straightforward and honest. He is asking client, I want your property, plant, equipment register. I need to verify that. They say, auditor, what? As if you don't know us, as if you don't believe us that we do the proper recording. Can you not just believe it when I am telling you that proper property, plant, equipment register has been maintained? Why you want voucher and supporting document and all of that? Take care of your health, The auditor says, no. Absolutely not. He says either you give me the information, or if you don't provide me the information, one, I will put it in my report. And if you don't allow me to put it in the report, I will withdraw from the engagement. I will withdraw. I will resign from this particular audit, but I will not succumb to the pressure of the management. Auditor should not succumb or come under the pressure of the management. That management is being so kind and they have been so much of hospitality for the auditor. Auditor, come. Auditor, was the tea okay? Auditor, everything okay? Auditor, do you want anything? Auditor says, I want nothing. You just give me the vouchers. Rest, everything I will manage on my own. You understand? No, you just give me the supportings, right? You just give me the evidence which I require in the audit, right? So what is that? Integrity, right? Integrity, what does it mean by integrity over here? Right? Straightforward and honest in all professional and business relationships, right? So how it should be? Straightforward and honest in all the professional and the business relationships, right? So you see it over here, straightforward and honest. Right, straightforward and honest in all his professional and business relationships. It implies fair dealing and truthfulness. Right, so truthfulness, what is as it is. No beating around the bush. No coming into the words of what others are trying to tell you. Auditor has to be straightforward. Yes, if I require, and if you don't be very straightforward and very, particular about what information you want from the client, you won't realize that when the client manipulated their books of account, when on the basis of manipulated accounts which they declared on the stock exchanges, the company share prices went to the rocket. Share price. Obviously, if they manipulate the sales and they declare such results of the company, that's what happened in Satyam Computers also, no? Satyam Computer Services Limited, their fraud was of 7,000 crore rupees. There was a fraud in the financial statements of Satyam of 7,000 crore rupees. Now, 7,000 crore fraud did not happen overnight. It happened over a period of time. Last 7 years. 2009, the fraud was confessed by Ramalinga Raju, by the MD of Satyam. But before 2009, last 7 years, the fraud was taking place in the company. It started as a marginal gap. Just doing an adjustment of 10 crore. Nothing big, it's okay. Then confidence increases, in doing the wrong thing. You understand now? Then 10 crore, they say, nobody came to know. One more, let me try, 20 crore. Then 20, then 200, then 200, then 2,000. You understand that? And 7 years when the fraud was taking place, auditor kept on expressing opinion, true and fair view, true and fair view. The actual cash of the company, actual cash and bank balances of the company, what they shown in the books of account was 400 crore. 5,400 crore is the cash and bank balance they showed with the company. Out of that, 5,040 crore was bogus cash. Bogus cash. I will show you later. It says the confession letter, non-existent cash and bank balances of 5,040 crore. Non-existent. It does not exist. Cash bank of 5,000 crore with the company which they are showing in their books of account does not exist. Don't you think that the auditor would have gone for the audit? He would have asked for the bank statement. He would have asked for the bank, and what auditor did? He relied on the photocopies of the FD receipts. He relied on the photocopy, the Xerox of the FD receipts of the company. Right? He never got the confirmation from the bank or financial institution. So obviously, auditor, did he perform his work carefully? No, he was not diligent. Auditor was not careful in performing his duties. So what happened? Shares of the company skyrocketed. The reason why a listed company generally manipulate their results, because nowadays it is not a game of profit. Nowadays, today's situation is such, is coming up with an IPO and having a game of valuation. You understand the valuation. You see the company might be in 3,000 crore loss, but you see valuation of company 40,000 crore rupees. And if you look at the valuation of the company. Right, so now company every year reports manipulated, accounts manipulated, auditor also keeps on saying true and fair, true and fair. And then over here share prices increase. Then all of a sudden something comes to SEBI's attention because ultimately it's a fraud. No, ultimately at some point of time, and generally it comes out at the wrong time. And generally, when things happen wrong, they happen wrong from all sides at the same time. Okay, and then it becomes beyond control also. Up to, because to speak one lie, you have to speak another lie. Then for that second lie, you have to speak the third lie to keep on covering up the lie. And then ultimately, the lie happens. What you say, the untruth goes beyond control over there. Okay, so then the share prices increases, then insider trading cases, and then board of directors, shareholders raise an objection, and then they say, call the auditor. They call the auditor. Then they say, auditor, what have you been doing? We appointed you to do the audit of the company. Then this auditor, his life becomes miserable. You understand? And finally, it brings a dent to the profession of chartered accountant. Okay, what are chartered accountants doing? And then now we also have the NFRA, the National Financial Reporting Authority, which monitors the chartered accountants. So now it is not only ICAI which regulates the chartered accountant. ICAI does. But it's also the NFRA, the National Financial Reporting Authority. Like recently, ILFS case. And the chartered accountants were also found to be guilty, saying that they have not done the work properly. NFRA has put a penalty of 25 lakh, 5 lakh rupees on the chartered accountants who were doing the audit. And they have also debarred the auditor. Debarred means they have told the auditor to stop working as an auditor for next 5 years or for next 7 years or so. And those are the NFRA orders which have been passed. Right? Those are the NFRA orders which have been passed. ICI also is Chartered Accountants Act 1949. If you're guilty of professional misconduct, again ICI will take action against the member. Right? They will tell him to suspend the COP. The certificate of practice of the member will be told to be suspended. Right. So anyways, what the point we are coming over here is why all of this could happen is because of the lack of integrity and because of entering into some wrong activities. Client is doing wrong, so you can avoid from being wrong, no? What does it say? It effectively means that he shall not be associated. The moment you can smell something is going wrong, you understand, no? Whenever you see that something is burning, you immediately come to know, no, I don't know, I'm getting some smell, something is wrong or something. Or like, even like, I don't know, I have little bit of cough. I don't know whether I should get the COVID-19 test done or so. So that type, symptomatic, no, those were like symptomatic and then asymptomatic and whatever it was. Okay, so it says whenever you see any symptoms in your client, now not COVID symptoms in your client, but if you see any fraud being done by your client, it says should not be associated. The CA, it says should not be associated with reports, returns, communication or other information. Look at the powerful sentence written over there, which he believes contains a materially false or a misleading statement, contains statements on information provided recklessly. Recklessly means without thinking much about it, just putting it unknowingly, or omits required information where such omission could be misleading. So omits. So company has 10 contingent liability and omitted to give. It says CA, you should not be associated. You say, I don't, it's a chartered accountant, how he should say? If he's doing an audit, he comes to know something fishy in the company, he says, I withdraw from the engagement. They say, we will not give you audit fee. Auditor says, no problem. Right? My integrity is more important for me. One audit will go, 10 other audits will come, but I cannot compromise on the integrity. Right? Chartered accountant, he cannot compromise on the integrity. Now, second one, obviously integrity. Wait, no. Okay, right. Integrity and the, see, always remember that I need a break more than you because I am continuously speaking. Okay, so I'll give you a break. No worries. Okay, right. So coming to objectivity, just one more. Okay, right, objectivity, because integrity and objectivity go hand in hand. We cannot take a break without finishing the objectivity, right? So objectivity means what? There should be no subjectivity, right? Objectivity means what? Auditor should not compromise. Not to compromise on the professional judgment. Later on, we are also going to see the term of the professional judgment. The principle of objectivity requires an auditor not to compromise. Right? Not to compromise professional judgment because of bias. Bias, why? Because client is saying that, next year we are thinking of increasing your audit fee by 20%. The auditor says, really? You're thinking? Okay, then true and fair. Okay, so bias or conflict of interest. Conflict of interest will happen when the auditor is not independent. conflict of interest will happen when they say, like I told you, the relative is such a chartered accountant is a relative. So then there will be conflict of interest. Then there would be subjectivity. There won't be objectivity, or there is undue influence of others, right? There is the undue influence of the members or the board of directors of the company. The shareholders, the management of the company. So what is the first ethical requirement for a chartered accountant? Integrity. Second one over there is the objectivity, right? We take a break and then we shall continue.